This is a short excursus into why January usually is a bad trading month and we shouldn't expect clear price action. The reason for this is the concept known as power of 3 or AMD. To set a foundation, every candle on every time frame can be defined in 3 steps, which are accumulation, manipulation and distribution. As you can see, I marked out a candle here. It's a bullish case. Reverse it if you have a bearish case. And you could also say that this candle should look kinda like this if we look at the line chart. So the 3 stages I just talked about usually consist of an accumulation phase. This is where price is being held inside a range and liquidity is building up above the range and below the range. We then see a manipulation phase where one side of the marketplace or one liquidity is being raided. This gives smart money the opportunity to get into the position they desire at the best price possible by buying from willing sellers or selling from willing buyers using the stop loss of their trades. And lastly, we see the distribution phase. This is the phase where the actual price move is occurring and the real profit making part of the move is happening. Understanding this concept unlocks a real power because not only candles but also sessions and years, so meaning the yearly candle, is formed around this premise. A key takeaway here is that we don't want to be part of the accumulation phase as price is very spotty and hard to trade inside. Like I just said, the yearly candle is also formed under the premise of power of 3, and using this information I think it's clear to understand why January usually is not a good month. It's like trying to front run the market on what it actually wants to do. So be careful in January and part of February as well, and don't expect to see clear price action and easy obvious moves. To illustrate this concept a little bit more, this is the 2025 trading year on nasdaq. Note that January and part of February is the accumulation phase. We then see a long manipulation phase that is lasting until April or May, followed then by the distribution phase of the year, which was seeking buy-side liquidity again made in January and February. And as we want to avoid the consolidation phase, we want to avoid most of January. This doesn't mean there are no moves that could be tradable in January. It just means that you have to dial back your expectations and be picky about your target.